not essentially surprised. I think regarding equities in general, we're quite cautiously optimistic at the moment. So in our kind of short to medium term outlook, we are quite positive, and that's really supported by strong fundamentals across the board. It will vary by region. So we have different views by developed markets versus equity in emerging markets. So very positive on emerging markets at the moment. And I think that's really because the rate cutting cycle is getting ahead in the emerging markets. So that's really reaping the benefits there.
And what does it mean then to see perhaps a slight fall off in the rate outlook then across the more developed world? I mean, we had initially seen the expectation of around 6 rate cuts out of the United States. That's fallen off to 3, of course, as the Fed had initially said. But we're even seeing Atlanta Fed President Raphael Bostic yesterday saying that perhaps even 1 could be enough this year.
Yeah, so they are being a bit more cautious on the size and the timing of rate cuts. But from our perspective, we're less concerned on the timing, and it's more the direction of travel. So inflation is coming under control. Rates are, we expect to be cut in the short term. The number of rate cuts, I think, will be less impactful. It's more the direction of travel. And that rate cut is really going to support the overall growth picture, both in the developed and, as I said, in the emerging markets.
Yeah. What's the broader implication for a longer downturn here, though, if that was to be the case? Would that create some worry, or is that just sufficient downturn for a rejuvenation of the market somewhat? So that's really the point where you could jump in again.
Yeah, so markets have had a really strong rally on the equity side over the last couple of months. So valuations are quite stretched, particularly in the US. But that could continue. Looking at tech stocks, anything AI related, consumer discretionary, all performing really, really strongly. The fundamentals, I say, are there. Corporate earnings are strong. So developed market, the growth outlook is a bit softer, but overall we are quite positive on equities.
Do you see a sense of selectivism coming through with those major tech players, not just in Europe, but really even around the world, when one takes a look at what really has been shifting markets? Do you think that a little bit more selectivism comes to play now?
Potentially. As I said, I think, it's tech, anything AI related, comms, that's all what's really driving returns. An element of that is trend, but it's also just the dynamics that's happening in the market. I think from our perspective, we like diversified portfolios. So we like having that exposure to growth stocks and the more defensive stocks. So I think that's the key part to getting stable equity returns, is really having that diversified approach.
Worried at all about what Fed Chair Jerome Powell would say on Capitol Hill today, or is it much of the same, do you expect?
I think much of the same. As I said, it's really about the direction of travel in relation to rates. And I think given inflation is coming under control, we do expect those rates to start coming down, maybe not in the next month or so, but it will happen later this year, we expect.